5. Start.
Hi there, happy Friday to all of our viewers and welcome to this week's last edition of Who Moved the Market. I'm Surabhi Upadhyay and with me in the house today is Vivek Iyer. Now, Vivek is our man who tracks potential changes to any of the foreign indices very carefully. You know, you have index providers like MSCI, like FTSE. What we know is that MSCI will be coming out with its index review shortly. It's on the 11th, Vivek?
May 11th.
May 11th.
Market hours Indian. So May 12th is when we will have the changes.
When we'll have the changes
and the exclusions.
So we will talk about the expected inclusions and exclusions, but that's not the big story. The reason we've got Vivek here today is because of this huge selling that you're seeing in both HDFC as well as HDFC Bank. Now, both of these stocks have been down about 5% since morning. They're very large stocks, and you don't see these kind of reactions on these two big boys, you know, pretty frequently. So Vivek, I think everyone's trying to understand what is going on here. Could there be something in the MSCI indices, you know, where the weightages increase, decrease? Explain to us, first of all, the relevance and the importance, and then what the fear is today.
Okay. So first thing to note is that both HDFC as well as HDFC Bank, both of these stocks are in the MSCI standard index, which is the main index that attracts the maximum number of flows. So now there's a major corporate action that's happening where both HDFC as well as HDFC Bank will get merged. Yeah. So what happens is HDFC Limited, which is listed, not just in NSE and BSE, but part of so many indices, part of the Nifty, part of MSCI, part of FTSE indices. Yeah. So, you know, the major debate that's been going on for the last 6-7 months has been how will index providers like NSE, like MSCI, like FTSE, how will they treat these stocks post the merger?
The merged entity.
The merged entity, which will be HDFC Bank. So the big question is, will it be deleted from the index?
Unlikely, I guess, because it's a huge stock, right?
No. So will HDFC be deleted and then added back as
the merged HDFC Bank?
So a lot of clarification has come in from NSE, from MSCI, from FTSE, where they will not be deleted from the index. Rather, you know, if you hold HDFC Bank shares, you will get HDFC Limited shares as part of the merged entity itself, right? So they continue to remain part. Now, what was happening earlier was that market participants were expecting the merged entity, which are both part of the index, to have a weightage or an inclusion factor of 1, which analysts believe would have led to inflows of close to $2.8 to $3 billion in the into the stocks, which is big and which is what market has started pricing in.
Okay, once again, if you are new to the market, just to make it even simpler, first of all, what is weightage? Every index has a set of constituents and all of those constituents are assigned a certain weight. So when that index moves as a level, like we say the Nifty is at 18,000 or 18,500, how do you arrive at that 18,500? It's a summation of all the individual weights of the constituents, and then you arrive at the index value. So basically, to cut a long story short, the higher the weightage of that particular stock in an index, the greater the amount of money that has to come in from a lot of the passive funds, these big global ETFs which simply track indices, simply mirror the index holdings. The greater the weightage of the stock on the index, the greater the amount of money that gushes into the stock, the greater the stock rises. So that's just simple, very basic sort of index philosophy and how it works. But Vivek, you used another new term, and that is the factor, right?
The adjustment factor.
Now, what is this adjustment factor?
Okay. Very complicated. Let's try and simplify it for our viewers. So the adjustment factor is the factor that is solely at the discretion of the index provider. In this case, solely at the discretion of MSCI.
Okay.
Now, MSCI decides when the merged entity comes in, depending on the foreign headroom available. What is the foreign headroom available? In the case of HDFC Bank, foreign shareholding can go up to 74%.
Okay.
As per the latest shareholding, foreign headroom, that is the amount of
additional FPI investment that can come in,
that is allowed, is at 18%.
Okay, so there's a 18% gap from where the foreign holding is right now in the stock and the level of 74% to which it can go to.
Correct. Yeah. Now, how does it tie up with our MSCI thesis? MSCI requires the stock to have a foreign headroom of 15% only.
Okay.
So, both the merged entity, the calculated, foreign headroom in the merged entity, which we just discussed at 18%.
Yeah.
So there's enough
the criteria.
Headroom, which is why analysts have started penciling in an inclusion factor of 1. Whereas you can go completely up to 74%.
Okay.
But in the case of HDFC and HDFC Bank, remember once again it's at the sole discretion of the index provider.
Right.
So now they have decided that in this particular case to reduce volatility, and it's solely at their discretion. They can do it. It's a bit of a negative surprise because of the expectations that were built in.
Sure.
Right. So they have decided that at this point of time, the merged entity will have an inclusion factor of 0.5
and not 1. Okay.
Now HDFC. So what it basically means is that the merged entity will continue to enjoy a weightage that HDFC currently has. So no incremental inflows come in.
Okay.
Rather, there is a small decrease and a small outflow of close to 180 to 200 million dollars, which is not very significant, will happen.
Okay.
So that is why this 0.5 to 1 becomes so important, and which is why we are seeing a sharp knock in both of these stocks today.
But you're saying that even if this factor is not 1 and it is 0.5, it will result only in a small outflow. That's what the calculations are showing. But then this is a pretty significant drop today on both the stocks, right?
So now we have to go back to the time when HDFC and HDFC Bank put up the shareholding pattern to the exchanges.
Right.
So quant analysts, whose job is to mainly track
these flows,
indices, and what is it. So they said that since the foreign headroom available is at 18%, and they had a feeling that with the inclusion factor coming up to 1, you will see incremental inflows of close to 2.8 to 3 billion dollars. So the outstanding open interest addition in HDFC as well as HDFC Bank, we can safely assume was starting to build up these positions in the event of the merger occurring, and the merged entity getting the inflows in MSCI.
So the anticipation was that because of these adjustments, there will be a total inflow of, you said, 2.8 to 3 billion dollars. And the market had started taking positions, traders had started taking positions, keeping that in mind.
That's a safe assumption that we are making.
Okay. And now that that's not happening,
not only is it not happening, in fact we are going to see a
minor outflow. So then again you have this technical adjustment of those positions, whether in the cash market or in the futures and options market.
Absolutely.
And you basically digest the new possibility.
Passive funds will take the positions or make the changes in their portfolio on the day of the effective changes of MSCI.
Right.
But active funds, obviously, they want to create alpha. So they start building in positions as soon as the quant analysts make their predictions. Which is why we are seeing the unwinding of the long positions that we saw in the stock.
Okay, so that explains how these two huge stocks, huge in terms of just their size, their weights on the index, how these stocks are down about 5% a piece today. Okay, so that's very, very helpful, Vivek. Now let's talk about some of the others, because I know you've been studying the expectations and the trends. As you said, May 11, post-markets, we will have the review from MSCI.
Right.
So again, these are all expectations. These are, sort of views that are there on the street right now. We have to wait for the actuals. But on expectations, who's likely to be in, who's likely to be booted out?
So MSCI has multiple indices. The index that we care about is the MSCI Global Standard Index. Okay, this is the index that attracts the maximum amount of passive fund interest. Right. So 3 stocks on our radar. First one is HAL, that is Hindustan Aeronautics. If you have a look at the stock's done exceedingly well.
It's gone through the roof.
So fundamentals aside, there's also been positions.
The technical factor. The
other one is Power Finance Corporation, which has been an outperformer in the last 3 to 4 months. And also Max Healthcare, multiple corporate actions have taken there. Some large block deals have happened there. So these 3 stocks, what are the likely inflows?
Will be included in all probability, might be included in the MSCI standard.
MSCI
all world, the global index.
MSCI Global Standard Index. $182 million likely flow, IIFL estimates. Power Finance around $136 million and Max Healthcare around $288 million. One likely outflow, that's because of the underperformance, is Indestar. So that stock could be out of the index around $75 million.
Okay, got that. So we'll watch out for, of course, these 4 and see if the changes actually come through in this expected fashion. I want to ask you about Kotak Mahindra Bank. Because there's been so much of buzz, and we saw Kotak do the move. Yes, the numbers were great, no doubt. But there was a lot of talk that there's also, the whole build-up happening on the possibility of some weight increase.
Absolutely. So Kotak Mahindra Bank, what we have to keep in mind is, once again, it is about FOL, foreign ownership limit, foreign headroom available in the stock. The same terms that we use for HDFC, we are now using. So Kotak Mahindra Bank, for the longest time, didn't see its weight get increased in the MSCI index because of certain rules that the Indian government had in terms of the FOL, So now it's gone up to the sectoral limit.
Which is 74%.
No, for HDFC, HDFC Bank, for this I think it is 55%.
Okay.
Remember we did the calculation some time ago, 40 to 55. So now the foreign headroom available is around 20%, which is makes the MSCI cutoff.
Right.
Okay, now why is this important? So both MSCI as well as FTSE will have taken the new shareholding pattern into account, and there will be increases as far as the weightage of the stock is in the MSCI standard index is concerned. FTSE divided this inflow into 8 quarters. MSCI has said that it is most likely take this in one single quarter. And why is this important? Around 750 to 800 million dollars worth of inflow in a single day can come into Kotak Mahindra Bank, which explains.
So basically, the weight adjustment happens in one go, and all the money just comes in one shot.
All the passive funds that goes in.
700 million, you said, right?
$750 million.
Okay, that's a lot of money.
That's a lot, which explains, we've seen, I think, a 8 to 10% stock price increase. And this was, one key overhang you could call on the stock, or one key expectation. Which is why the stock was underperforming. FI positions had to be unwound for headroom to be made. So all of that has now happened, and the main, some other stocks also. Since we've discussed weight increases, watch out for Indigo. One of the erstwhile promoter stake sale is happening, so that's giving it more headroom. Zomato too. A lot of stake sales happen, so that will come in too. And we'll also have to watch out for what happens to the Adani group of stocks. So that'll be. So largely, this is what you have to keep in mind for the MSCI index review, May 11th.
May 11th. So we come back to work on Monday, and we will come back to Vivek as well to see finally what came out in the index review and what the actuals are. Thank you very much, Vivek. You have explained it beautifully, a rather technical subject, but I think you've made it fairly simple for our viewers to understand. So really appreciate it.
Thank you so much.
All right, we hope you found that helpful, and with that, we're going to take your leave on this edition of Who Moved the Market. Have a super weekend, but don't go away anywhere right now. Markets are still trading, and we are live with all the action. But you have a great week and weekend. We'll see you again next week.